Good afternoon. We are doing it live right here. Let's get right down to business this afternoon here on 790 KBC, Mottek On Money, live for you every afternoon at 4. Weekdays at 4, right here, 790 KBC, streaming live online worldwide on 790 KBC, KBC.com, and of course the on-demand Mottek On Money podcast. We want to tell you about that's at KBC.com, Apple, iTunes, and all your favorite podcast platforms. Well, we saw a rough ending to the week on Wall Street today, with stocks ending mostly lower. The S&P 500 racking up its third straight week of losses as the tech names really took a hit today, including the magnificent one, NVIDIA, seeing a big drop. The S&P 500 coming in for a closing loss of 44 points, and that is its sixth consecutive daily decline. The NASDAQ was down 319 points. Also falling for a sixth straight day, the Dow came in for a closing gain of 211 points to end at 37,986. That was the one bright spot. For the week, though, the S&P 500 gave back 3%, the NASDAQ down 5.5%. The Dow actually eked out a less than 0.1% gain, so let's call it pretty flat for the week. The NASDAQ logging a fourth straight week of losses, its longest losing streak since December of 2022. Nervous time in the Middle East following the Israeli retaliatory strike on Iran yesterday. Oil did settle slightly higher today, but posted a weekly drop after Iran played down the reported Israeli attack on Iran, a sign that an escalation of hostilities in the Middle East might be avoided at this point. Brent crude in London moved up 18 cents to 87.29 a barrel, and West Texas Intermediate traded in New York ended 41 cents higher to 83.14 a barrel. Both of those oil benchmarks spiked more than $3 a barrel earlier in the session after explosions were heard in the Iranian city of Isfahan in what sources described as an Israeli attack, but the gains were capped after Tehran played down the incident and said it did not plan to retaliate. The price of gold, meanwhile, has been in focus, hitting record highs again this week. Gold prices rose today and logged a fifth consecutive weekly rise as fears of further retaliation raids between Iran and Israel triggered safe haven demand for gold. We saw gold moving higher to settle at $2,413.80 an ounce. Silver also moved up 37 cents today to $28.75 an ounce. Tesla in the spotlight, making news today. Probably seen those new Cybertrucks driving around. I saw a couple of them today. Well, Tesla has to recall nearly 4,000 of those new Cybertrucks due to potential problems with their accelerator pedals, according to the National Highway Traffic Safety Administration. They disclosed the recall affecting nearly 4,000 of those Cybertrucks, noting that the accelerator pedal pad may dislodge and become trapped by the interior trim. Tesla shares pulling back today, and Tesla, of course, has had a rough ride lately. Some Tesla recalls can be addressed with over-the-air software updates. This one is different, though, as the company will be doing actual physical repairs. Tesla stock, by the way, now down 41% so far this year, as the company's been hit by challenges including demand weakness and growing competition. Demand weakness despite the rise in gas prices, by the way. The magnificent one, NVIDIA, saw a big stock plunge today, in fact, leading the so-called Magnificent Seven to a record weekly market cap loss. The decline in Magnificent Seven stocks erased about $950 billion from their market caps this week, which made for the group's worst ever weekly loss of market value. Tesla among those Magnificent Seven stocks, which, of course, also moved lower. Joining us live now is Brian Perry, investment expert. To kick things off here, chief investment strategist and portfolio manager at Mint Asset Management, also the author of the 25% Cash Machine. Brian, thank you very much for taking the call. Let's talk about this week's action. And by the way, we'll be speaking to John Kilduff later this hour, the oil analyst, and again, Capital and CNBC contributor. Certainly with the tensions in the Middle East rising, we're watching the latest developments there too. But take it from the top and give us your assessment of the epic events this week.
Thank you, Frank. Certainly a confluence of some major events during the week here with some new perceptions about, the path forward for the market. Certainly the Mideast tension grabbed all the top headlines of the week here. And quite frankly, this last night's attack by Israel on Haifa, the third largest city in Iran, deep into the country, sent a clear signal by Israel that, we can defend anything you throw at us, but you cannot defend anything that we throw at you. And normally, like before, when we saw the first Desert Storm invasion, the market really hunkered down going into that because there's a big unknown. There was a lot of saber rattling by Iraq at the time, and Saddam Hussein. And at that time, when it became clear that we had a much superior upper hand militarily speaking, then the market just roared higher. This has not yet taken fold here, but I think it's very clear that this combination of the Israeli defenses, the U.S. Navy, and other the Brits and other cooperative nations, that Iran is no match for this. So I am a little bit surprised, although the tape did not necessarily imply that the market was as bad as it looked today, because you had early gains fade, for lack of conviction from buyers. But despite the big point losses, which are magnified by the big cap tech names, for the Nasdaq and the S&P, declining stocks only had fractional lead over advancers at both the NYSE and at the Nasdaq. So that really was an interesting take on the day. The downside catalyst for the week included, bond yields hitting the 6-month highs because of the idea that, are there any rate cuts coming? Are there any in sight? This is a market that is now twisting in the wind about, the dot plot plan just 2 weeks ago looked, like a good to go 3.3 cuts for the year. Jerome Powell was talking in a dovish manner. Then we got, further stronger inflation data, CPI, as well as retail data, and the market just, the bond market took a blind eye. Plus, we had a treasury auction that did not go that well. Dealers had to take back as much as 24% of the offering at the auction, and normally that's no more than 12%. So the demand for U.S. Debt, was soft, and that's got people concerned. That also pushed yields higher, and so therefore you had the 10-year get up to 4.7. The 2-year touched 5%, just backed off fractionally from there. So that's got people wondering about where this is all going here. Inflation's here for a little bit higher for longer. And then thirdly, you had some earnings, a couple of big earnings, high-profile earnings disappointments here out of ASML, which is a semiconductor chip manufacturer, but their primary markets are graphic processing units, GPUs, equipment for that, the lithography equipment. It goes into the PC market, the laptops and notebooks and things like that. And the other one was Taiwan Semiconductor, which had better numbers than forecast, but at the same time they talked about how the recovery in the computer market was more gradual than first anticipated. Again, targeting the computer side, but not AI. So this is what I find, there's a real bifurcation here going on, that everything just took a big step back because the AI trade is being called into question at the moment. I'll talk about that in a second. But, semiconductor stocks, they led the market broadly lower, certainly after this, and momentum begets momentum, and it's kind of a market here where things get going to the downside. But I think that, what we're seeing here now is that the current landscape is, it's pretty much every stock for itself at this point here. You had really good numbers and good price action out of stocks like United Airlines and Alaska Airlines and Genuine Parts and Goldman Sachs and today American Express up big versus Netflix, saying we're not going to, forecast our subscriber growth starting, in 2025. Stock got hit hard. Again, ASML and NVIDIA pulled back hard. Super Microcomputer pulled back because they announced their earnings date, but they didn't pre-announce their earnings like they did the last quarter. And a lot of hot money came out of that today. It was down big. So, the AI chips and server demand, from what I read, the estimates are still extremely robust. They're looking for 200% year-to-year growth, from last year to this year. So there's a real proving ground now for the big cap tech. Not everything's going to work. So you've got to be very careful here, and it's a real stock picker's market here because of the magnitude of the weighting of these stocks on the Nasdaq itself. Whereas the S&P and the Dow are holding their what I call their 20-week moving averages. When you pull up 3-year charts, they're holding well, where the Nasdaq has breached that level here. And so, again, earnings season is coming up here next week. We got big, important numbers coming out of Microsoft, Alphabet, Google, Western Digital, Lam Research. And then the following Tuesday, we've got Amazon. So there's a lot of big companies on deck that I believe will deliver the goods, Frank.
Tesla also, right, on Tuesday, I believe, and that pulled into reverse in a big way so far this year, and now there's a recall of their Cybertruck. So, what about Tesla here?
It's still it's still in a void. We talked a while ago about this going to 150, and it was looking like it was heading down there. Certainly, there's a lot of hope that the Cybertruck would be the turning point for the stock, and then this recall today was just really took the rug out from underneath the stock here. It wasn't down big yet because it looks very, very washed out. But the Chinese market is soft, and you got the Chinese, manufacturing companies are going to start dumping cheap EVs on the market here. Tesla really it's a high-end electric vehicle by most measures around the world in terms of pricing. So that market is still under pressure here, and I just think that you've got it seems like the hybrid EVs are really taking hold in terms of the more favored type of a car people want to drive in that class.
We see Tesla shares down about $3 today at 147 and change. NVIDIA getting a lot of attention, plunging nearly $85 today, Brian, at 762 here. What about NVIDIA leading those magnificent seven names sharply lower today, and collectively a real washout for those names?
Yes, you had the stock break its 50-day moving average this morning here, and that really the algorithms just took over from that standpoint here, and it was just again technical selling here as opposed to there was no story around the stock whatsoever, but it did feed on the other two semiconductor stocks that had posted earlier softness guidance during the week, and that was Taiwan Semi as well as ASML. Both of which are pretty much unrelated. You still have Taiwan Semi still said their AI manufacturing is very strong, but other parts of the computer industry, and they're the largest foundry in the world. They make chips for every kind of industry, automobiles, handhelds, smartphones, you name it. And so you have to carve out, the certain subsets here. And so NVIDIA is pulling back. It snapped the technical, what I call support level here. And now you have, some support right around the 750 level there. It had a big gap from 700 to 800. So filling that gap is technically what happens sometimes when you get a market that feeds on itself to the downside. And that's what we're seeing right now. They don't report earnings until May 22nd, which is like a lifetime from now for those that are watching the stock. So we're going to be one of those where the other big names are going to have to show that their AI programs and systems and their models that are replaced, like Microsoft and Alphabet and Amazon, are actually the real deal. And if they can show that this is the future is and the revolution is as strong as we've been claiming it is, then I think you'll see the conviction and the credibility come back into the sector. And I think you'll see NVIDIA recoup. But you are in open water here with this question of, did this AI whole experience get ahead of itself? And right now it is being called into question because of a couple stocks that are, that really broke down.
You raise an important point. Of course, we've seen computerized trading now for 30, 40 plus years now. But what about AI-related trading? You think maybe NVIDIA is being hit by the robots here? Oh,
yeah, for sure. No, there's a high-speed trading, high-frequency trading, for those that don't know this, accounts for roughly 70% of the daily volume every day on the stock market. So you've got tremendous amounts of robotic trading here, which they use these little technical levels and they feed off the headlines. So if a negative headline hits the tape, then it hits the sector, and so from that standpoint, if NVIDIA doesn't come out and say, "Hey, business is great. I don't know what's going on here," then there's a vacuum of information. Therefore, you get more, follow-on selling here, especially when the stock breaks at the key technical support level, like at the 50-day, which is what a lot of people were watching. So, again, it's one of those, but the stock is trading at a relatively cheap value here, about 35 times forward earnings here, going forward here with tremendous forecasting guidance by the CEO just 2 weeks ago at the NVIDIA GPT conference. So, I think that the stock is technically it's damaged here, but I think it will make find its footing here next week. And I do look for the market. If there's nothing that happens over the weekend here, the commentary that will come out regarding separating out the AI experience and the stocks that are not just your run-of-the-mill vanilla tech stocks that do everything. Let's say Apple, for instance, Frank, is in trouble here. It's just breaking down further because the smartphone market is saturated. Samsung just took over the number one spot, and their second biggest market is China, which is not showing the same kind of demand. So And again, heavyweight stock, weighing heavy on the NASDAQ, and it just has this sentiment. It builds negative sentiment that, all things are negative at the moment. But the market will go through a washout here in the next week or so is what I anticipate, and then separate the wheat from the chaff.
Wow, that is certainly big news. And bond yields rising. It's been a rough several weeks for bonds, certainly. And the yield in the 10-year note now at 4.63%. That's the one that impacts the fixed-rate mortgage rates. And we have seen those tick to new 2024 highs here. At this point, Brian Perry, let me ask you the big question now then, so we have some time here. Where are you putting money now and or taking it off the table?
Well, when you have a market like this where it tends to, there's a lot of rotation, sector rotation, and they're looking for things that are, that have shown really good technical strength and good forward guidance. In the last week here, Goldman Sachs, really put up some phenomenal numbers here. So the stock ran up. It's pulled back here to the low 400 area here. People should look at that. Same thing in the financial sector here. Visa is going to report next week. The stock was trading, about 15 points higher, pulling back here to a nice support level here. I like Visa here and too. So you have two big blue chip financials in here. In the tech sector here, two names that are holding their uptrends very nicely here. One is IBM, and they have the Watson AI experience, as well as Micron Technology, which NVIDIA is going to be using their memory chips in their H100, H200 chips, their AI chips. So Micron's pulling back after having just a big gap higher here when they reported numbers last time. And then in the manufacturing area here, I really like Eaton Corp, ETN, and also Caterpillar, CAT. Two leaders for industrials, because the industrial sector is acting very well here. They're showing very strong numbers and good guidance here. So those two look good on pullbacks, technically in great shape. And then Home Depot. Pulled all the way back, from 396 to 335, and it's trading right on its 200-day moving average. And rarely do investors get a chance to buy one of the top 2 or 3 retailers in the world at this kind of a pullback here, because of higher interest rates and because of the threat of maybe people slowing down building and remodeling. I don't, every time that notion has surfaced, Frank, it's always been a great time to buy Home Depot. And lastly, in the energy sector, summer driving season is coming upon us, and the labor market's good. People are going to spend, and Valero is one of the 2 largest refiners in the country here. That's pulled off, the 190 level here to 160 as oil prices, move higher here. So it implies, slimmer profit margins for the refiners. But stock technically looks really good here, and it's really a demand story as opposed to a pricing story. So if they're selling more gasoline, then Valero's going to, considerably, I think, move back to new highs. So coming off real quickly, United Healthcare made a big snapback rally back. But again, Medicare is not going to reimburse these big companies as much as they thought. So I would be a better seller of that. And then Nike continues to bounced a little bit this week, but still in a very protracted downtrend. And Starbucks also, small bounce, but too much exposure to China like Nike, and definitely a defined downtrend at this point.
All right. We also saw Paramount Global get a boost today on more speculation on takeover of that entertainment giant here, which includes Paramount Studios as well as CBS and all that. We see Paramount Global among the leaders, up $1.47 at 12 and change. What about that space, Brian?
Well, it looks like the Redstones, Sherry Redstone, the widower of Sumner Redstone. I guess they've got 77% of the voting stock, Frank. So not so much of the common, but the voting stock they own. And it looks like that she's willing to sell the company. That's not been the case there for a long, long time. And so Skydance, is the suitor in this deal here. So just maybe this is going to happen here. Because Netflix, it just dominates this area here, the other streamers do have to consolidate, and because they've actually been selling off a lot of their key assets to Netflix in order to keep going here. So Netflix is the only company that's actually, got free cash flow positive numbers now. It's taken them a long time, but, Paramount and the other ones are just still, burning cash every quarter. And so I think there's a consolidation coming here because they're just not going to get the ad spend, that Netflix gets going forward here. So I don't know who watches CBS streaming, things like that. You wonder. But anyway, that's kind of what's happening here, Frank. I do expect a lot of M&A in the streaming sector here, and I think it's going to happen rather quickly.
Brian, wish we had more time as always. Thank you very much for taking the call here this afternoon to wrap up an important week. That is Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com. Also the author of the 25% Cash Machine. Brian, have a great weekend, and thanks again for coming to the line.
Thank you, Frank. Have a great weekend as well.
YouTube, thank you very much. And right out to the freeways now, 790 KABC. Friends, people like you and me have our ear to the ground on all things business. We like to be informed and indeed well prepared. And as important as finance is, I want you to have a plan in case you're hit by someone not paying attention to the road. Thinking ahead serves us well, and even still we can get caught off guard as people are so focused on their destination that they might not have a plan if they're in an accident that's not their fault. That's why I encourage you to put my friend Attorney Clark Fielding's number in your phone. That number is 833-88-SHARK. So if you're in an accident, you'll be ready with your strategy to make Clark Fielding your very first call. Fielding Law aims for the highest possible settlement, considering you might need long-term care, rehab, compensation for lost wages, and any ongoing physical or emotional pain. So if you're hurt in any kind of accident, call for a free consultation with Fielding Law. You can trust them. They're honest, respected, and your strategy in case you get into that unexpected accident. Motorcycle, truck, pedestrian, scooter, hit and run, boating, or bike accidents, you name it. That number is 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. 790 KBC welcomes the band War coming to the LA County Fair May 3rd. It's that time of the year again for corn dogs and cotton candy. And don't miss the country's largest county fair coming up soon. This year's theme, Stars, Stripes, and Fun. Tickets are on sale now at the LACountyFair.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller 9. Call right now, 1-888-790-5222. Mottek On Money continues here in 790 KABC. The Dow coming in for a closing gain of 211 points, settling at 37,986. But the other major averages pulled back. The S&P 500 down 44 at 4,967, and the NASDAQ down 319 at 15,282 as the Magnificent Seven stocks took a big hit today, including NVIDIA at the head of the pack, down nearly $85 at $762. We saw Tesla shares also slip into reverse, down nearly $3 at $147.05. Paramount Global among the winners today, up $1.47 at $12.44 a share. Taking a look at the price of oil, it moved higher by 51 cents at $83.24. Gold up nearly $9 at $2,406.70 an ounce. Silver up 37 cents at $28.75. Taking a look at the cryptos now, Bitcoin down about 120 at 64,188, Ethereum up 5 at 3,082, and Doge at 16 cents. And now the latest news here, 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. Testimony before the California State Assembly Committee on Business and Professions surrounding several bills looking to implement the California Reparations Task Force recommendations. For example, AB 2862 would require that the issuance of occupational and professional licenses be based on race and ancestry. Specifically, African Americans would receive priority in receiving licenses, especially descendants of enslaved persons. According to the bill, individuals and other race-seeking a license would be pushed to the back of the line. AB 2862 is unconstitutional as drafted and undermines equality and opportunity, according to the Pacific Legal Foundation. And joining us live now is Caleb Trotter, an attorney with the Pacific Legal Foundation. Caleb, thank you very much for taking the call. Maybe you can explain to the audience what this bill is all about and what you told the committee recently.
Yeah, thanks for having me. Happy to do so. So the last couple of years, California has been engaged in a project exploring various ideas centered around reparations for the descendants of former slaves. And in the last several months, that report has been released with a number of recommendations, kind of applying to all manners of society. Of interest to us at Pacific Legal Foundation is this one particular bill that you mentioned that would prioritize only African Americans and especially descendants of slaves in applying for various occupational licenses. So, think your contractor, massage therapist, the list goes on of various workers and professionals who have to be licensed by the state. So what this bill would do is when an African American would apply for a license, just by virtue of their race, they'd be moved to the front of the line in considering those applications. Now, because of the 14th Amendment to the U.S. Constitution's Equal Protection Clause, however, that would be explicitly and very straightforwardly unconstitutional because the Constitution guarantees equality under the law, and specifically favoring one race or another would very straightforwardly violate that provision.
Where do things stand with this AB 2862? It's being considered in committee now. Where do things stand there?
Yeah, so this week it was in the Assembly Business and Professions Committee. Unfortunately, it passed along that. I would encourage listeners to, you can find the video for that committee hearing, and I had 2 minutes to discuss the unconstitutionality of this bill, but also just the notion of favoring one race over another is just, it's morally and foundationally abhorrent under the founding ideals of this country. And in response to my comments, at least 3 of the Assembly members, I would say, were just outright defiant and basically acknowledging that may be what the Constitution says, but that they are going to choose to do something differently. And so it's kind of shocking to see such defiance right in front of your face, but all listeners could go see that. The next step for the bill is next Tuesday morning. It will be heard in the Assembly Judiciary Committee. I hope that there will be a much more lengthy and certainly serious conversation on the constitutional question there. If it were to get through that committee, then it would go to the full Assembly and then would have to move on to the Senate. So it's still a long road to go before this bill were to become law, if it does. But just because it is so straightforward in favoring one race or another, I think it's very important to be pushing back on that and to be pointing out just not only the constitutional problems with it, but just the inherent lack of fairness in favoring one race over another.
On your live with attorney Caleb Trotter, an attorney with the Pacific Legal Foundation. We're talking about AB 2862 in Sacramento that would require the issuance of occupational and professional licenses be based on race and ancestry here in California. Now, had you discussed some alternatives and other reforms that the legislature could consider that would not violate the Constitution in your view?
Yeah, that's right. I certainly appreciate the legislature's concern that barriers to enter professions and trades that are created by the licensure process, those are serious barriers. I mean, there's tons of economic literature out there that has studied this, and the studies, I don't know if it's unanimous, but it is certainly a heavy majority, all confirm that the licensure system primarily just poses to limit the number of people who can enter professions and trades. It results in higher prices to the public. It really only protects existing participants in whatever profession or trade it is. And so we should be looking across the board to limit those burdens and barriers to allow greater economic opportunity for all people, not just in California, but throughout the United States. So I completely agree with the legislature wanting to remove barriers for people to pursue their economic livelihood. But this bill, AB 2862, in only creating a benefit for members of one race is definitely not the way of going about it. We can do this in a race-neutral fashion of looking to lessen the barriers, removing unnecessary licenses for certain professions. And these are things that would help everyone in California, not just people looking to break into an occupation or trade, but also consumers who would have more options of people to choose from to provide those services.
Attorney Caleb Trotter, an attorney with the Pacific Legal Foundation, thanks very much for bringing this to our attention this afternoon and for explaining it so well. Look forward to being in touch with you as we follow that bill in Sacramento. Caleb, thank you very much for joining us here this afternoon.
Absolutely. Thanks for having me on.
And let's get right out to the freeways now as we head into the weekend here in 790 KBC. Mottek On Money continues here, 790 KBC. Good afternoon. It was just about 24 hours ago that the first reports came in that Israel had hit Iran in a retaliatory strike. This after Iran attacked Israel last weekend with a barrage of missiles and drones. Financial markets reacted immediately. It was a nervous night and a nervous morning. Oil settled slightly higher today, but posted a weekly drop after Iran played down a reported Israeli attack on its soil. The price of Brent crude in London moved up 18 cents to 87.29 a barrel, and it was down for the week. And the price of oil in New York ended higher by 41 cents to 83.14. It, too, was down for the week. Both benchmarks spiked more than $3 a barrel earlier today after explosions were heard in an Iranian city in what sources described as an Israeli attack. The Iranians seem to be downplaying this attack. And joining us live now to assess all of this is our veteran oil analyst, John Kilduff at Again Capital, longtime CNBC contributor and longtime contributor to this program. John Kilduff, thank you very much for taking the call here. Heading into the weekend, give us your view of things here at the moment.
Well, Frank, I was hoping for a quiet, non-nervous weekend, but it appears that's not going to be the case. While you've been on the air, there has been what's described through various media outlets as a, quote, huge explosion in a pro-Iranian military base just outside Baghdad. So it appears this isn't over yet, unfortunately. It's telling, though, that this strike, whoever is behind it, the Israelis have not claimed responsibility, and they still haven't claimed responsibility for the Iranian strike last night. So we're going to continue down this road, it appears, for a while. This is what I was trying to, and you and I spoke about recently when I was on with you about how the desire for direct conflict between Iran and Israel just is lacking, thankfully. And both try to finesse and put on some theater, both to show the world and to show their internal populace that they mean business about what's happening in the region. And certainly there are real, situations evolving here in terms of, what happened obviously in Gaza, what continues to happen in Gaza, and what's happening in and around the region in the Red Sea and the like. So, the oil market had a huge exhale last night when the news first came out at around 10 p.m. Eastern time. Oil prices soared. We spiked about $2 to $4 a barrel for a time, and as you reported just a second ago, we backed off once we realized that the Israeli strike was limited. So this is what we're living with for now. Oil prices are not cheap, with WTI holding above $80 a barrel and Brent hanging around that $90 a barrel mark. So there's not going to be any real relief at the pump anytime soon. And we're vulnerable to these headlines. If the markets were trading tonight with this strike, we'd be right back above 90 for Brent and right back towards that same number for WTI, Frank.
On the air live with oil analyst John Kilduff, and we're watching the latest reports come across the wires. Thank you for bringing that to our attention. We're getting this news now from the Jerusalem Post that a huge blast hit an Iraqi military base used by popular mobilization forces near Baghdad. The huge blast rocked the military base south of Baghdad, with Iraqi sources alleging the attack to Israel and the United States. According to the Jerusalem Post, significant strikes were carried out overnight between Friday and Saturday against targets of Iranian-backed militias in Iraq south of Baghdad, as reported by a Saudi-owned news network. Additionally, Iraqi media claimed that the attack was carried out by a number of drones targeting a military base belonging to the militias. So this attack now focused south of Baghdad. Any reaction that you've seen, notably so far in the financial and energy markets?
We're all closed right now, Frank, so no. But I will tell you that Bitcoin, the only thing that does trade 24/7, did sell off like it has been doing on these developments. So I would expect that, we have enough time between now and Monday, if nothing else happens, that this will also be sort of an also-ran kind of, input for oil prices, because this is, again, it's not a direct hit on Iran, obviously, nor is it any kind of direct hit on Israel. It's the land of proxy battles here between these two forces, Israel and Iran. There's going to definitely be raised nervousness now. My Jewish friends are celebrating or observing Passover on Monday and Tuesday, as you know, and several days after that for some of the more observant folks. So the tensions in the region and the potential for something to happen here are going to be extant as a result of the calendar. So again, it's a very nervous market, very nervous oil market anyway, Frank, and we're going to keep this geopolitical premium that's in prices very much inflated for now. I will tell you that the sell-offs that you're seeing as things calm down or we get some clarity on these situations are indicative of what I've been talking about with you in terms of the demand picture for oil globally not being terrific. China continues to struggle. There continues to be a push out of as much oil as Russia can get onto the market and evade sanctions and the like. Matter of fact, they are, selling heavily again to India. So, we have the supply. We're not completely at risk the way we were, say, back in the day of these events. But again, if this starts to turn into a situation where not only the Red Sea, but the Strait of Hormuz region becomes a bad neighborhood where shipping interests have to avoid it out of an abundance of caution, then we start to get really problematic here.
Once again, violence flaring in the Persian Gulf. And John, thank you very much for sharing that news with us and for your analysis. We'll keep an open line to you as we'll track these developments in the week ahead. That is oil analyst John Kilduff at Again Capital, CNBC contributor and longtime friend and contributor on this program. John, thank you very much once again for taking the call this afternoon. This is Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back at 4 with more Monday afternoon at 4 right here, Mottek On Money, 790 KBC.
Named one of the best personal finance podcasts, The Stacking Benjamin Show with Joe and his friends makes financial literacy fun.
Work hard and save your money. That way, when you're old like me, you can buy the things that only young people can enjoy.
Squirrel watching.
You heard it here first. Get yourself a squirrel cam, spend $30 a month on nuts, and you'll be at early retirement before you know it.
No, Piggy, this is the road to a podcast nobody listens to.
Find out more by searching the Stacking Benjamins podcast, wherever you listen.